Hello and welcome to this exciting video presentation. We're discussing a useful plugin depends on economic calendar and news releases. This strategy is rather simple. You just predict the move of the market after news release, then you set the plugin to buy or sell orders just seconds before the actual news release. When you first open the plugin, you'll notice 7 tabs and 4 different areas. 5 tabs of the 7, considered as sub-strategies, will come to explain each one in details. Let's begin with the 4 areas. First area is the economic calendar, which is the cornerstone of this strategy. The second is positions panel, third is orders, and fourth is the strategy definition, where you can change the parameters of your configuration. The economic calendar has country, where the news are coming from or where they're going to affect. Volatility indicates the significance of the news. High is the most important. Actual is the actual move made by the market. Consensus is the forecast or predictions of the next move made by the experts. Previous is the move happened by previous releases of a periodic news as monthly or weekly releases. Currency is the currency affected by the news release. Let's begin with the first strategy, which is predict the news. The trader usually places orders just before the news release, because at the time of the news release, there might be rapid price move as well as wider spreads. This method can maximize the profit and avoid slippage because the orders opened when the market is still silent. Now let's navigate through this strategy and learn about the setup. Symbol is the default currency associated with the news release. You can select the symbol to trade from the list. Lot size, default value is 0.1, but the trader can enter any lot size. Strategy, trader picks one strategy from the available options. In this case, it is predict the news. Open, pick from buy or sell the options available here. This depends on the trader's view of the price direction after news release. In this example, trader picks buy at X seconds before news release. Here, the trader specifies when to buy. Default is 60 seconds. Stop loss, the stop loss level in pips. This stop loss is applied to the trade. Take profit, target level from entry point in pips. Trailing sell, trailing stop loss in pips. Trailing stop loss is a special kind of stop loss. After trade is opened, if the position moves in favor by a specified number of pips. Start at. This defines the level of start trailing stop loss. Hide stop loss. This hides the stop loss to brokers. The app evaluates stop loss hit condition on every tick, and if stop loss is hit, it will immediately close the position with the market order. This is useful when the trader has apprehensions about the stop loss being run by big hands. Pending trap. This is typical strategy that places 2 opposite pending stop orders before news release to catch the breakout regardless of the direction of the price move. We expect big jump triggers one of the pending orders. This strategy is used when high volatility is expected. Place 2 contains 2 options, fixed and floating stop. Fixed stop. Here we can place the order just before the news release, let's say 30 seconds before it. Then the buy stop and sell stop orders are placed at fixed distance from the bid and the ask rates at the time of order placing. Floating stop. In this case, after placing the 2 orders, the order is continuously monitored until news release time. Thus, it avoids false breakouts before the actual news release. Grid pending trap. Grid pending trap strategy sets a series of pending orders like a grid. In this strategy, many orders are placed above and below current bid and ask at fixed intervals. The idea is adding our profitable positions at the breakout direction to maximize profit. The only addition item to be set up in this strategy is the grid intervals. For example, place 2 by 3 means 3 orders above the actual news release and 3 orders below it. Martingale pending trap. Also known as never lose again strategy, Martingale uses lot size increase to cover previous losses if any. It's a great strategy when combining it with the news and when the price makes a big move. The new items you need to know in this panel are scaled lot size and repeat this X times. Scaled lot size is the lot size multiplication factor after a losing trade. Repeat this X times sets the number of times this process of opening trades when stop loss is hit with scaled lot size. And finally, we have actual news strategy. Based on actual report, this strategy waits until the actual report of the news is loaded, then compare it to forecast and previous data in order to decide the direction of the trade. Thanks for watching.